We're talking now with Jeri in California. Jeri with Allworth's Money Matters.
Good morning.
Hello, Jeri.
How are you guys?
Good. Not
as good as you.
Not as
I
much
know.
energy as you, but we'll get by. What can we do to help?
Good. Well, I have a question. I'm here in California, and I have a son, and I have rental properties, and I want to know what's the best way when I transition and he gets this rental property for him to either avoid or minimize inheritance tax.
Okay. Well, let's talk about the rules today.
Yeah, when are you going to die?
Correct.
But soon, we're pretty clear.
Yes.
You know, I'm 65. I'm negotiating right now with the guy upstairs for 20 more years right now.
Okay.
All right,
We're in negotiations with that right now.
Odds are you have a long time to go.
So, and the reason we say that almost flippantly is because the estate exemption amount, the amount that exempt from tax, expires at the end of 2025. The current number expires at the end of 2025. And it goes back down to about 6 million.
About 6 million.
And right now it's about 14 million per person.
Wow.
About that. But it was only a temporary, which is the way Congress uses these things when they do tax cuts that
increase the deficit.
They don't make them permanent, and that way they can get away with it. But it depends on who ends up in office next year and what the makeup of our political system looks like.
Yeah, because right now it's currently set to expire the 14 million, which is an index for inflation. Why you said it's about. That will revert back to a previous number, which is 5 million. That's indexed for inflation, so it's going to be roughly 6 million today. But there's also proposals. I just read one yesterday with a chance that they're going to start taxing the gain, unrealized gain on inheritance for estates above some value.
Oh, gosh.
Which, by the way, makes perfect sense to me.
What do you mean it makes sense to you?
Why is that?
That either you have the capital gain or the exemption, but not both.
Oh, okay.
I mean, from a rational standpoint.
Correct. From a purely
Well,
rational.
a purely rational standpoint would take out the rate of inflation on a capital gain and only tax you on a true gain.
Okay, all right. We could do a whole program on rational. I mean, but thank you, Scott. That makes sense because otherwise
you increase inflation and suddenly the debt's much less, and also you get higher tax revenues off capital gains.
So, but that's let's just answer your question, Jeri.
Yeah,
what are the values? What is the value of these rentals?
Right now, probably about $3 million.
Okay,
right now.
So under current tax code, if you die, you receive. Are you married?
No.
Okay. If you die, you receive a step up in basis.
Your son does.
Correct.
Okay.
Your son, which means there's no taxes.
Just like he paid $3 million for these properties.
And there's no taxes. So I'll give you an example where this is really kind of important. I was bicycle riding with a friend of mine, and his father.
Pat's showing off two things: one, that he's exercising,
and
two, that he is a friend.
That's great. Yes, great.
I should say I was bicycle riding with my friend, a singular, and his father's in his late 80s and has a bunch of rental properties in the San Francisco Bay Area that he has collected over the years.
And it's worth quite a bit now.
Worth a lot of money. And so
wouldn't have been so much if it was in Detroit.
Yes, it just happened to be that they're in the Bay Area,
right?
Because this is where this Greek immigrant landed in the U.S.
Great.
So
good for him.
No kidding. And by the way, he said, if you talk to my dad, you'd think he was the poorest man you ever met, which is like exactly. So he was
sort of like me. I don't buy anything. I just leave it all for him.
Right. That's why you have money. So we talked about it, and I said, he's talking about selling them. I'm like, you've got to really sit down and think about this.
Because selling them?
Because the
capital
gains, but then he's talking about fire insurance and these things, and I'm like, well, maybe you do a structured sale to someone so that you can recognize some of the game, push it off. There's all these kinds of different things.
Balloon payment.
Correct.
Triggered
Right.
at his death.
Correct.
I don't know if you
right?
can quite do that, but yeah, you can structure something.
Correct. But so in your situation right now, if you plan on holding these to death, don't worry about it.
Okay.
Now, under Prop 13, what we would expect, because they're rentals, under Prop 13 in the state of California, that there will be an increase in property taxes on this.
Okay, so that is expected. Okay.
And is your goal here is to make sure that your son has money in retirement, or what is? Because you're relatively young. To say I'm 65, and I want to make sure your number one objective is to make sure he doesn't pay capital gain taxes on this, and you're asking God for 25 more years. So
Right. So, and my goal is
you'll
really
be 90. How old will he be?
He's 28 right now.
Okay, he's still relatively young.
So, yeah, totally relatively young. So I'm trying to ensure that he won't lose anything if he has to pay a whole lot of money out. That's what I'm trying to.
Okay, well, you're right now. You're under.
I wouldn't do any other advanced planning than having just a basic living trust set up.
That's right.
If I were
That's
you.
what I have, and I have that right now.
Because
So I'm good with that.
you can, if you transfer these into some sort of irrevocable trust to try to preserve this exemption for the fear that it's going to go below $3 million, then whatever gain happens going forward, that will be.
It happens in his.
Actually, the cost base is going to transfer over to the trust, and all that gain would be taxed one day.
So under current tax law, you're perfect.
Yeah.
Okay.
But
perfect.
we're not attorneys, so consulted.
Yes.
Okay.
attorney
And
for
what
legal
kind of an attorney? Like a tax attorney?
Estate planning.
Estate planning. But
Estate
you have
planning attorney.
you have a trust, correct?
I have a trust.
How up to
I
date
have
is
a
the trust?
I just updated it about 4 months ago.
You don't need to do
yeah,
anything.
yeah.
You're perfect.
Why didn't your attorney have these conversations with you at that time?
Somewhat, but not a lot.
Okay.
Oh, all right.
No,
Yeah.
you're fine.
A good attorney usually talks through these things,
I'm
trying to figure out what
gonna
you're
say
trying
no.
to accomplish.
I'm just going to say no. How about
Okay.
that?
Okay.
No,
you're
all
fine.
you need is a basic trust. at this point.
Call us back in
25
January. No, call us back January of 2020. Call us in January of 2026, God willing.
That's what I'm going to do. That's what I'm going to do. I'm going to reach out to you guys for sure.
All
Okay.
right.
All right.
Thanks,
Appreciate
Jeri.
the call.
Appreciate the call.
All right. Thank you.